Spectrum TV, broadening your horizon.
My name is Blyden Ukem. In Business 360 today, we'll look at the key features, beginning from Nigeria's outlook and the information making rounds in the world of business. We'll look at the state of crude oil exploration in Nigeria, amid all the concerns and theft. We'll also get to look at the stock market as well as the forex market and x-ray the very events in the commodity market. Nigerian government records 40.6% rise in fiscal deficit to 746.3 billion naira. That's where we begin from. The Central Bank of Nigeria, CBN, has reported that the federal government's fiscal deficit has increased to 746.3 billion naira in November 2022. This is a 40.6% increase when compared to 530.87 billion naira recorded in the month of October 2022. The Apex Bank disclosed this in its November 2022 economic report released on Tuesday. The report noted that the increase in the fiscal deficit reflected the 9.1% rise in provisional expenditure and 21.4% shortfall in revenue in the reviewed period. So looking at the outline in Nigeria, the federal government is reviving shut-in crude oil wells in a bid to produce about 2.1 million barrels of oil daily, with an estimated worth of 2.4 trillion naira monthly from various drilling facilities in the Niger Delta. According to data from the Nigerian Upstream Petroleum Regulatory Commission, about 900,000 barrels of oil per day could be produced from quick intervention on the shut-in wells, while the medium and long-term initiatives could add 1.2 million barrels of oil daily. This implies that about 2.1 million barrels of oil per day, or 63 million barrels monthly, would be produced from the facilities. Sounds like good news from a Nigerian perspective. There are other stories regarding oil and the petroleum company in Nigeria. The Nigerian National Petroleum Company Limited has said that Nigeria's oil production had increased to 1.6 million barrels per day, a few million short of 1.8 million barrels per day quota, allocated to Nigeria by the Organization of Petroleum Exporting Countries. NNPCL's Group Chief Executive Malek Kyari revealed this at a meeting of industry stakeholders called to discuss the challenges of crude oil theft and losses affecting the oil and gas sector. Kyari, who was represented by the head upstream investment NNPCL, Bala Wunti, at the event, which was chaired by the Vice President Professor Yemi Osibanjo, said the implementation of the DTH Destroy and Recover program had paid off positively. Positive outlook from a Nigerian perspective regarding oil production and exploration, and is making a lot of sense. But let's look at where prices were high regarding oil proceeds. Kerosene soared by 136% to 1,105 naira in December, according to MBS report. The average retail price per litre of household kerosene rose by 136% to 1,105 naira in December 2022, from 468 naira in the same period of the previous year, according to latest data released by the National Bureau of Statistics. The report, titled National Household Kerosene Price Watch, December 2022, stated that while consumers in December 2022 paid an average of 1,105 naira, indicating an increase of almost 2% compared to 1,085 naira recorded in November 2022. On a year-on basis, the average retail price per litre of the product rose by 136% from 468 naira in December 2021. Looking at the profiles of states and its analysis, the highest average price per litre in December 2022 was recorded in Abuja with 1,383 naira, followed by Akwa Ibom State with 1,342 naira and Cross River State 1,000 300 naira. On the other hand, the lowest price was recorded in Bayelsa State with 865 naira, followed by Jigawa State with 900 naira and Rivers with 917 naira. Quite concerning from a Akwa Ibom perspective that prices of these crude oil proceeds and commodities are getting higher and higher regarding 2022 last year. It would be a good time to look at the global economy and what economic outlines are. We begin with economic calendar. Key data releases for today, Wednesday, February 22nd, 2023. The economic data, according to today, has indicated that as at 8:45 a.m. this morning, business confidence in France, indicative of February confidence, was at 104 points, or 103 previously, indicating an improvement in the confidence, but just slightly. The forecast was at 104 points, but it hit that 104 points. Looking at the key highlights for the morning session, it had to be a data release which indicates the info business climate in Germany. Current outlook is 91.1, revised from 90.1 previously, and the outlook for January was 90.1 previously, and the consensus outlook 91.2. The forecast was 91.6 points, but it did not reach the forecast, but an improvement from the previous outline, which was in January, the business confidence in Germany. Let's look at the evening period and the projection of data release that could come out within the evening period. The highlighted one. In Korea, around 10 p.m., there will be PPI, Producer Price Index year-on-year is expected to be out, which could be indicative of some outlook in Korea. Can the market meet the projected outlook at 5.8%? Only time will tell. Regarding businesses, recessions occur when personal consumption, representing about 2/3 of GDP, weakens materially. The resiliency of personal consumption is directly related to jobs, not rates or inflation. To get an answer to this outlook, let's have insights by Blue Putnam, Chief Economist, CME Group, regarding recession.
Raised rates and the yield curve inverted, an indicator of a potential future recession. Nevertheless, the widely forecasted U.S. recession did not happen in 2022, and it might not happen in 2023 either. Recessions occur when personal consumption, about 2/3 of GDP, weakens materially. The resiliency of personal consumption is directly related to jobs, not rates or inflation. Inflation can mean one does not get quite as much for one's money, but spending continues. Credit card rates are considerably higher and set differently than the Fed's policy rates, so Fed rate increases do not hit consumption directly. But if one loses one's job, one spends less. If one witnesses colleagues lose their job, one may cut back spending. If extended family members lose their jobs, spending is reduced. What is happening as we enter 2023 is that sectors that benefited in the pandemic often hired aggressively to take advantage of the situation, as in technology, social media, and Wall Street. Indeed, these sectors hired more people than jobs were actually lost. And now, as the economy rebounds, these same sectors are losing their advantages and having to lay off some workers. By contrast, in the leisure and hospitality sectors, hiring has not yet caught up with the pre-pandemic levels. The ebb and flow of jobs lost in some sectors and jobs gained in others is not an indicator of a recession. Watch the weekly new unemployment insurance claims. Weekly new claims are under 220.
That was Blue Putnam, the Chief Economist at the CME Group, talking about recession indicators. But we'll move to the commodity market. Silver gets a volatile start to the year. Although silver is trading well above its 2022 level, prices of the industrial stable have whipsawed since the start of the year. While renewed strength is in manufacturing and a losing of supply constraint offered some early momentum, big shifts in monetary policy by major central banks quickly arrested any further moves to the upside. What's the mid-term outlook for silver? That will be the question and the concern for most traders and economists. Let's have insights from Bob Icino of Part Trading Partners regarding this.
Gold. Silver futures started off 2023 on a positive note. When measured from the closing price on December 30th to the high on February 2nd, price had risen almost 3%. But silver closed lower on February 2nd, and since that down day, price has fallen over 12%. Renewed strength in the manufacturing sector and supply constraints were the dominant narrative at the beginning of the year for the industrial side of silver. But since then, a strengthening dollar and higher yields in the U.S. have softened the price of the precious metal. Typically, precious metals have an inverse relationship to rising bond yields, as silver and gold pay no dividend or yield to long-term holders of the precious metals. Silver prices are still up almost 25% from the 2022 lows, but the data and the direction of global central banks' rate decisions are likely to decide whether this is a precious metal bear market beginning or just a correction in a longer-term bull. Silver futures.
As the outlook regarding silver and the opportunities in the market, prices are upward, but can it be sustained? A good look at the metal market would make a lot of sense from explains more on the dispute and how it affects copper.
Period of time, copper's up over 5%. That's based on the February 15th close. Also, that February 15th close was the lowest close going all the way back to January 6th. Today, we ended up settling up over 2.5% from yesterday's settlement of 410.85. That's over 2.5% higher. On the high today, 3.13% higher from yesterday's settlement, 423.70 was that high in the March contract. On the low side, 410.15 wasn't even down 0.2%, 17 basis points to be exact. Now, there are some supply worries propping up the market as a supply dispute at the Cobre mine in Panama shows no end in sight yet as of today. The latest update has Panama's Maritime Authority not moving from their proclamation last month to suspend copper concentrate loading at a major port. That's essentially blocking First Quantum, who is the operator of the mine, from shipping copper that it might have sold. So that really stalls the supply globally, although it's building up an inventory as the mine continues to operate. First Quantum has actually threatened to shut down the mine. They have not done that as of yet. We also had dollar strength today, and you know the supply picture is...
But it would be a good time to look at what the metal market is saying this morning regarding copper, gold, silver, and the rest, the metal market. The market this morning has given different perspective to it. Few markets are upward, the likes of steel and iron ore, but most of the metals are downward this morning. We look at gold, negative 0.02% decline. For silver, it's a similar story. The difference is not much in terms of volatility downward, but a 0.037 points, a negative 0.18% decline. Current price $21.787 US per ounce. Copper slightly downward, but steel is relatively stable this morning amid all the concerns and investors waiting for different outlooks from the US Fed. 4,231 Chinese yuan per ton for steel. 16 point appreciation is 0.38% appreciation. Iron ore is following suit, slightly upward by 3 points, a 2.31% appreciation, $133 US per ton. But for lithium, used in making batteries on watches, current price 417,500 Chinese yuan per ton, downward by 5,000 points, a negative 1.18% decline. Let's look at the energy market as well to see the perspective of US crude oil market, many will call it. It has to do with the US crude, the WTI US crude, $74 per barrel, downward by 1.49 points, a negative 1.95% decline. For Brent crude, current price, which is Nigeria's price benchmark, $81 per barrel, downward by 1.15 points, a negative 1.39% decline. Natural gas is slowing down too, gasoline slowing down this morning, heating oil slowing down, but coal, current price $209 per ton, upward by 3.35 points, a 1.63% appreciation for coal. Agricultural market would make sense, a lot of sense, to see how the commodity weakness as well as the energy weakness is affecting the agricultural market. The price of wheat being part of it, as well as sugar and the rest. Let's have a look at the agricultural market. While waiting for the perspective in this market, there have been some solid performance from palm oil. In recent times, for the past week, palm oil has been solid, gaining by 5.28% appreciation. Current price this morning is 4,145 Malaysian ringgit per ton, upward by just 4 points. For cheese, similar story but gaining slightly. But let's look at soybeans. What's happening with soybeans? Current price $1,445 per bushel, downward by 4.75 points, a negative 0.31% decline. On a weekly basis, soybeans has gained, but not reasonably, 1.21% appreciation. For wheat, it's the same story. It's fallen throughout this week, negative 3.19% decline, $744 per bushel for wheat, downward this morning by 5.51 points. For lumber, a little here, a little there it's been, but downward by 2.4 points. And it's been quite resolute for palm oil in the market, the way palm oil has been performing. Let's look at the foreign exchange market. When we talk about foreign exchange market, there are concerns around the UK. PMI data pushes pound futures to 4-session high. Dan Deming has more in the commentary for us. Dan Deming.
Trading sessions off the intraday highs, but still up over 0.5% on the day. 1.2125 for the lead future here. And we look at some of the driving factors today. The primary driver appears to be the PMI data release this morning. UK PMI data coming in stronger on both the manufacturing and service side, and as well as shifting the dynamics of the current trends within those data releases over the last couple of months, which were trending lower. So we're seeing a trend shift in the PMI data, also pricing pressures within those PMI data points, indicating that pricing pressures remain elevated. Therefore, the expectations are that the Bank of England is going to become more hawkish, potentially shift the dynamic as far as interest rate hikes moving forward, and that's benefiting the British pound. Couple that with the PMI data points indicating that the economic structure is probably a little stronger than what was anticipated is another factor.
The UK's manufacturing index has shown elevated expectations in the economy of UK. But it will be a good time to look at what's happening with other currencies, the majors, beginning with the euro against the US dollar in the market. The FX market has been one that is up and down, relatively, comparatively, like what's happening, or comparatively to what's happening with the energy market and the rest of the market. Let's find out how the conditioning is for most of these currencies. In the market this morning, the euro against the US dollar, it's 1.06 US dollar equaling 1 euro. The struggle continues for the euro. It's not been able to go past the 1.07 mark, which it reached some time ago last week. But it's been a negative 1% for the euro, attempting to gain against the US dollar. For the pounds against the US dollar, current price 1.20 points. It's quite difficult for the pound to still trying to break away from the 1.20 mark, but it's very difficult. A decline of 0.32% for that pair. For the Aussie, it's been a little here, a little there, but one mark is that the US dollar is quite strong in the market for the past week, making it difficult for the rest of the pair. Let's see the performance of the dollar against the naira this morning and as at the close of yesterday's market. The market indicates 59.97 naira equaling 1 US dollar. On a yearly basis, it's been a massive gain against the naira, but the volatility within the US dollar is a little here, a little there, not quite adequate to push the market forward. For the euro against the naira, it's been a similar story. Naira gain against the euro, a negative 1.26 points, a loss for the euro against the naira, but a gain of 0.26% appreciation for the naira against the euro at the international and exchange window. 4.34% gain for euro against the naira on a yearly basis. But for the pound is stronger than the naira as at the close of yesterday's market. 556.7 naira equaling 1 pound. A 2.91% points gain for the pound against the naira. A 0.53% gain for the pound against the naira. Let's look at naira's perspective at the parallel market, the black market, where many people would go for an offer. The black market exchange rate is indicative at a buying rate for the dollar to the naira. The buying rate is 767 naira to $1, and the selling rate 758 naira to $1, and you can see the spread there. For pounds to naira, the buying rate is 935 naira, equaling £1, and 920 naira at the selling rate, equaling £1. For the euro, it's 800 naira at the buying rate, equaling €1, and 785 naira at the selling rate, equaling €1. But the outline for Canadian dollar, it's here: the rand, South African rand, the dirham, the yuan from China, and the Ghanaian cedi against the naira. Let's look at the stock market right now and what's happening within the stocks, the global stocks first, before we x-ray what will happen or it's happened in the Nigerian market. We begin with Asian stock, as Asian stocks track Wall Street lower. Asian equity markets fell today, tracking sharp losses on Wall Street overnight as fears that the Fed will continue hiking rates to tame inflation and economic warnings from major U.S. retailers rattled markets. Investors also digested a raft of economic data in Asia. Well, the RBNZ, which is the Bank of New Zealand, delivered a widely expected 50 basis points and its rate hikes on increase. Shares in Australia, Japan, South Korea, Hong Kong and China declined this morning. Good time to look at what's happening in Nigeria, the Nigerian stock market now. The Nigerian capital market closed trading yesterday with a 19.08 billion naira loss, quite concerning. This followed the dip in equity capitalization by a negative 0.06%, from 29.53 trillion naira to 29.51 trillion naira at the close of the day's business. The all-share index dipped by 35.04 basis points to close at 54,189.31 points. Investors traded 254.17 million shares, worth 15.57 billion naira in 2,950 deals. Let's look at the top gainers. Triple G led the gainers list with a 21 kobo rise in share price, moving from 2 naira 18 kobo to 2 naira 39 kobo per share. A look at the bottom losers. Veritas Capital topped the losers table after shedding 4.76% to drop from 21 kobo to 20 kobo per share. The top trades of yesterday. Geregu led the day's trading with 125.01 million shares valued at 12.5 million naira. This is where we draw a curtain on today's edition of Business 360. Thank you for watching. My name is Blyden Ukem.